Good morning everyone, this is Sakis Paraskevov, fundamental analyst at IronFX Global, bringing you the morning comment for the 16th of November. In the wake of Paris terror attacks, demand for the safe haven, Japanese yen, and to a lesser extent the Swiss franc, firmed. Even though it's been a relatively modest reaction, it could intensify if global risk rises. France already launched airstrikes against Islamic State in Syria, and world leaders promised a forceful response against terrorist attacks at the G20 meeting in Turkey. The tragic events in Paris could put investors in defensive mood as far as risk is considered, with equity markets poised to a weak start. Concern about similar attacks beyond France may have a more prolonged impact on travel and tourism sectors if the consumer sentiment deteriorates. Overnight, Japan's economy fell back into recession in Q3, mainly due to the slowdown in emerging market economies. The preliminary GDP data showed a contraction of 0.2% quarter-on-quarter, followed by a 0.3% contraction in Q2. The two consecutive quarters of contraction is the definition of a technical recession. This is the fifth time in 7 years Japan slides into recession, putting policymakers under pressure to deploy further monetary or fiscal stimulus in the coming months. However, comments by Bank of Japan Governor Kuroda so far show that the bank is in no mood to ease policy further anytime soon. As a result, the market will closely watch the Bank of Japan meeting on Thursday for clues of a possible change in stance and hints of additional measures. The Nikkei dipped sharply at the opening of trade on Monday in the wake of Paris strategy, and even declined more following the soft data. As such, Japanese yen found some buying interest and strengthened against the euro and the US dollar. As for today, during the European day, we get Eurozone's final CPI for October. As usual, Eurozone's final inflation figure is expected to confirm the preliminary reading. Thus, the market reaction is usually limited at the release, unless we have a huge revision. Norway's trade balance for the same month is also coming out. In the US, the New York manufacturing PMI for November is coming out, and from Canada, we get manufacturing sales for September. The New York manufacturing index is forecast to have risen to -5 from -11, but to remain below zero. While there is no forecast for Canada's manufacturing sales, we have only one speaker on Monday's agenda. ECB President Mario Draghi speaks to the annual gathering for the Euro Finance Week in Frankfurt. As for the rest of the week, on Tuesday, the German ZUW survey for November is coming out. The current situation index is expected to see a modest decline, while the expectations index is expected to have risen. Last month, the expectations index plunged as the Volkswagen scandal, coupled with the weak growth in emerging markets, deteriorated the economic outlook for Germany. Therefore, a rebound in expectations seems normal after such a plunge. In the UK, the spotlight will be on the CPI data for October. In its quarterly inflation report, the Bank of England downgraded its medium-term growth and inflation forecast, while it noted that it sees risk slightly to the downside for inflation to reach their target in 2 years. As a result, a disappointment in the CPI data is possible, something that could push further back expectations of a rate hike by the Bank of England and is likely to put the pound under renewed selling pressure. We get CPI data for October from the US as well. Following the astonishing surge in the NFP for October, even a modest rise in the US inflation rate is likely to add to expectations for a Fed liftoff in December and could strengthen the greenback further. On Wednesday, in the US, the housing starts and the more forward-looking building permits for October are expected to have accelerated somewhat. These data are likely to confirm the overall strength in the housing sector and could support the dollar. On Thursday, during the Asian Day, the Bank of Japan monetary policy meeting will take center stage. At their last meeting, the bank kept its monetary stimulus program unchanged despite downgrading again its inflation forecast. At the press conference following the meeting, Governor Kuroda maintained his optimistic view that the tight job market will push up wages and thus consumer spending, and that this will be sufficient to boost inflation. As such, we would expect the policy to remain unchanged again and the focus to shift on Governor Kuroda's press conference afterwards. The ECB releases the minutes of its October policy meeting, when President Draghi signaled that the bank stands ready to undertake further stimulus measures that could even include a cut to the already negative deposit rate. The minutes will give us more insights about the members' discussion over which tools can be used and in what extent to support Eurozone's fragile economy. As for the indicators, we get UK retail sales for October. Finally, on Friday, Canada CPI data for October are coming out. Given the renewed slump in oil prices, a disappointment in the CPI figures is likely to put Canadian dollar under renewed selling pressure. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, fundamental analyst at IronFX Global, wishing you solid trading.